Hello, investors and traders, and welcome to the weekly market report with the Market Guys. I'm AJ Monty. When the Market Guys was first founded, our goal was to create a brand that represented the finest financial education available in the world. And we continue to build on our brand by providing different services. This weekly market report is just one of those services. And my goal is to teach people how to read the charts in such a way that it will help them increase their profits and build their confidence level in their ability to basically forecast the market. Now, if you really want to get the most out of this particular service, what I would suggest you do is go to last week's market report and open that up and either review it beforehand, before watching this recording, or what you can do is open up the charts, hit the pause button on the most current one, and compare the charts back and forth. And the reason for doing that is because you'll then appreciate the accuracy of these forecasts, and it's almost uncanny. As an example, let me just talk about the diamonds. These horizontal lines are the lines that I left from last week's report. I'll zoom in here for you so you can see what I'm talking about. And I use that as a reference to really talk about where we've been in the past week, and then I'll erase those lines and redraw what I believe is going to happen for the next week. And you can see here that my forecast was that we were going to bounce off of this established support level, go higher to test this resistance level, and then eventually pull back. And again, these lines were drawn last week. And you can see how right here, the market followed that line almost exactly to the penny, hit the resistance area yesterday on Thursday here, and then pulled back, again, exactly like I mentioned. So, yeah, it's great to be able to talk about the accuracy of what's been discussed, but the most important thing is, okay, what's happening next week? What's the probability of the market moving a certain way? And then once you understand how the market is most likely going to move, you can position yourself accordingly. So if it looks like the markets are going to drop, and I do think they could pull back from resistance here even further, then what you want to do is either take some profits first thing Monday morning, or at least raise your stops so that you're protecting those profits. So let's continue to do this. I'm going to erase these lines from last week, and then I'll redraw those lines again for you so that you can see exactly how to do this yourself. Now again, this is support, this is resistance. You can see here, Friday the 19th, we had a red candle. Again, the pullback or pivot point away from resistance. So what does that mean? It means that there's a good chance the markets are going to drop right back down to retest support again. Why? Because we're stuck in a trading channel right now. Support, resistance running parallel is either called a trading range or a trading channel. Now, it's still too early to tell whether or not support is going to hold. I just believe that there's a higher probability that the sellers will maintain their control to the point where we'll retest support, and then we'll have to look at volume to see whether or not we're going to bounce. So if you're going to be a longer term investor, put your stops below the support level, or look at stocks that you're holding, identify support, and then put your stops below those support levels. So that's the diamonds. Now, if we look at a more broad-based index, that's the Russell 2000. I've done the same thing. I've left my lines from last week. This was my forecast that we would go higher, we would go test resistance, and then pull back. Now, what's happened? We had a slight breach of that resistance, and then a red spinning top, which is signaling another pivot point. So again, the forecast was to be higher up to resistance, and that's exactly what we saw. So let me redraw these lines again so that you can look at what I think will happen next week. I will remove that drawing. I'll remove this resistance area, because I think what we are already seeing is more of a diagonal line here and what I would even call a triangle pattern. But I think we will pull back from that resistance and get to an area where I think we can see a roll reversal support. What's a roll reversal support? That's an area of resistance. You see this inverted V right here? We're going to draw that as former resistance, which is now broken. Okay, the resistance was broken, and what happens is former resistance then turns to support. So I'm going to leave this line here, as I believe that the market will pull back to retest this line as the newest support level. Okay, let's move on. The spiders, ticker symbol SPY. This is the S&P 500 ETF, and like the other two indices that we've discussed, I left my lines from last week in place right there. You can see that we moved exactly in line with that angle. We retested this resistance and then pulled back. Now, this might look like a big gap, but it's not, because I have the chart zoomed in. You can see this is just mere pennies here from resistance and then pull back. So how do we redraw them? If we think that the bears are in control or the sellers are in control, we're going to continue this line in a retest of this area right here. So I think we could pull back to retest this area of support and maybe even this trend line. And I'm going to leave that in place so that we can look at that next week to see whether or not we're as accurate as we have been for many months now. Again, that's the S&P 500 ETF, aka the spiders. Now, if we look at the Qs, that's the Nasdaq market, also known as the power shares. I'll zoom in here. Here's my forecast from last week. What happened? We moved right up in that angle. We hit this line, which is where I thought the resistance was. We breached it and came right back and closed beneath it. So that held perfectly as resistance, and now I'm going to redraw that. And actually, I'm going to delete all the lines right now. I'm going to remove all drawings. Simple right click on my chart. I don't know what trading platform you're using, but most charts are very easy to use. It's going to give you a menu on the right mouse click, which will give you many different options to be able to draw your lines, and especially support and resistance lines. So where's my new resistance line? It's going to be at this high, connecting to this high, projecting out. It doesn't have to be an exact point right there. It's just a general area. There's my new resistance area. My support level is really going to connect as many of these lows as I possibly can, or get as close to them as I can, and then I drop it right there. See how I drew the support? Connecting the lows. Here's the resistance, connecting the highs. These are converging on one another, forming a triangle. You could also call it a pennant. We had a flag back here. A pole back here is what they call that, a pennant, a flag pattern. This is also a very reliable technical signal, as we now see the line that I'm going to draw is a retest back down to test this line, and then we'll have to see whether or not it'll bounce or fail and break below. So there's a good chance that the markets, you can see all the indices are pointing in the same direction, which is lower. They're all looking bearish, at least for the short term. So again, it confirms our strategy for managing risk by protecting ourselves with stops. For those who are more advanced, you might use options to protect yourself, or at least lower your cost basis on some of the positions. There's so much you can do. If you're really in cash and you don't want to buy anything that is going to hurt you on the way down, then look at the contra funds. Those go up in value as the general market drops in price. So there's just so many different investment instruments that allow you to make money either up, down, or even sideways, that we at the Market Guys are keeping pretty busy trying to educate everyone to keep them on the same page, because remember, education is a risk-free investment. That's an absolute certain right there. Now finally, I'm going to look at the VIX. This is the volatility index. The volatility index is a contrarian indicator to the S&P. It basically goes opposite. If the S&P goes up, the VIX drops. If the S&P drops, the VIX will go up. And you can see I'm leaving this line in place because we did test support. I drew the support level last week to show everyone how to do that. I drew resistance up here. The VIX is also stuck in a trading range. And what we have here is a Harami. That's actually a bullish signal. So I'm going to leave this in place because I think the VIX is going to go up, retest resistance, and possibly pull back. And what does that mean for the general markets? Well, if the VIX is looking bullish like it is, the general markets are going to most likely drop. And we saw that on all of the signals in every index that we looked at. So if that's not enough evidence for you that technical analysis is the greatest tool around for both traders and investors, I don't know what else to tell you. It's absolutely accurate, and there's a very high probability that what I've said today is going to take place next week. Finally, this coming Monday, we have an open house Q&A session. Just go to the Market Guys homepage, that's www.themarketguys.com, and scroll down, and you'll see that there's a link right there that will get you to the free open house Q&A session. It's open to the general public. We do not charge admission for that. It's a lot of fun. It's a 1-hour session of rapid fire stock analysis where I take your stock symbols, analyze them, and then basically look at strategies that can help you make money and most definitely protect yourself against any loss in the market. So that's it for now. The weekly market report with the Market Guys. I'm AJ Monty. Have a great weekend. So long.